so all tied together as one. And as custodians of the country, we have a responsibility, which then leads me into our next part of our conversation today with Jeremy Burke. He is the co-fund manager of the WA Impact Fund. So this is where we're going to be very interesting, and Impact Investment Groups, head of product and strategy. So, and I think all of the information about Jeremy, if you want to go through and talk to him, it's been sent to you through our chat mode. So, welcome, Jeremy, and as we say, Kaya Wanju. I'll hand over to you now.
Morning, David. Thank you very much, and it's great to be joining everyone today. That was a fantastic first session from David and Oral. Very grateful to be able to join that. So I'm joining from Melbourne, where I'm on the land of the Wurundjeri people, and I'm within a few hundred metres of our sacred river, the Burrarung. So I'd like to pay my respects to traditional owners, past and present, and thank you all for inviting me today. So I'm here to briefly talk about the kind of approach we're taking on the WA Impact Fund, give a bit of background on that. I recognise a number of faces and names today, so I'll keep that quite short because a number of you were able to join us in February when we launched the fund. And then I think, David, we're going to have a bit of Q&A and then hopefully some questions from the audience. So does that sound all right?
So,
great.
No, you can go first.
Yep.
So just briefly, the WA Impact Fund, which many of you will be familiar with, was launched in February. Impact Investment Group is the fund manager for that, and I'm delighted to be the co-fund manager with my colleague Amanda Goodman. It's been set up with an anchor investment of $20 million from WA Super, and it's a really focused place-based investment fund. So WA Super, who have the majority of their members in Western Australia, really want to be a leader in how you can deliver social impact along with appropriate financial returns. And so much of the discussion we had when we were talking to them was about how we can reconnect people's money to their investments and the actual outcomes that come from it. And so much of what I think Oral was talking about was about reconnecting. So we want to do it from a financial sense, and we think that can link really strongly to country and regenerative investment. The fund has WA Super as an anchor investor, and we're working on a series of initial investments. We're developing what we call the pipeline there, which we hope will cover regenerative agriculture. We can look at for-purpose property. We can look at clean energy solutions, finance for social enterprise, and we've got a bit of a catch-all bucket for other social outcomes. So we're busy working on potential opportunities and talking to other groups and individuals who would like to join WA Super and be investors in the fund. So that work continues. Regrettably, some delay given the pandemic situation. You'll notice, for those who I have met before, I'm sporting an isolation haircut. We are a little bit behind Western Australia on opening up our various parts of the economy, so I continue to grow my luscious locks for a little.
Suggesting that Western Australia have got hair like mine.
Very good, very good. So no, great to be here, David, and looking forward to the discussion.
Okay, question. What makes impact investment a good fit for investment in industries like ag, forestry, etc.?
So I think for many of you, impact investing is something that a number of you will be familiar with. The way we think about impact investment is, first and foremost, you're looking to deliver intentional and measurable social and or environmental returns, ideally both, alongside financial returns. And it's important that we're always clear that you're looking for both of those, but the financial returns can vary. So for some impact investors, they want to be making appropriate risk-adjusted returns. We try not to use the term market-based returns because we think the market is underappreciating a lot of the risks that come with our current financial system in many and varied ways. And so impact investing is really about delivering both financial returns and social and environmental returns. And it goes to the heart of that intentionality is how we distinguish it from responsible investing, where often you'll be looking at screening investments, and so you're in that case a more softer approach. With impact investing, you're really very clear on what you deliberately want to get out of your investment. So we think that impact investing can be a better fit for industries like ag or forestry or regenerative practices generally, because really we think you can take a more holistic look at the sector and the opportunities. So you can be much more explicit about the opportunity set. You can look at how you want your investments to be more resilient. You might take different approaches, certainly in agriculture, where you're looking to be deliberately regenerative, that give you your returns over a slower period, but with a higher degree of confidence. We think you can also be much more aware of risk factors. One of the big challenges that we've seen, and we saw it through March with the share market movements, is things can move dramatically very quickly if you haven't got diversification. When you look at an agriculture or forestry investment, you can really get great diversification across what you do on the farm. Oral gave the example of planting trees. You can be really kind of managing your environment to get your soil quality up. You can be looking at different streams of revenue. So we think that mix of risk and return opportunity is really great from an impact investment perspective. And then because you're taking a more holistic view, you actually have the ability to reduce negative impacts. So you can be reducing your carbon emissions. You can be looking at drawing down carbon rather than emitting it. And so if we do end up with decent carbon policy and carbon pricing, not only are you not exposed to emitting carbon, you're actually able to benefit and draw down carbon and have a different revenue stream. You can then look at things that obviously is pertinent to a Western Australian perspective around your social license to operate. So in the way you build your ag and forestry, you can have a positive impact on your local community, and you can build goodwill and good practices into how you manage that. And then one of the other things that we've been looking at a lot lately is supply chain considerations. So how do we reduce the size of our supply chains? How do our supply chains become more resilient? How does Western Australia benefit from the fact that you can produce within Western Australia and sell into a large economy like Perth, and then relatively closely into international markets, but keeping that quite a small supply chain, so not looking to stretch beyond the local as much as possible. So we think there's huge opportunities on the forestry side, moving away from monoculture tree planting to really trying to incorporate different rotation and different approaches there, taking a long-term view rather than a number of the approaches that have been, I would have to say, very financially driven and very short-term in their nature.
Yeah, no, that's fantastic. I suppose with the new information that we now have out there in the public, thanks to you, Jeremy, sharing that with us about your haircut style. One of the things is that you think there's a great opportunity for a group of shearers from Western Australia coming across and taking that challenge and maybe giving some haircuts over there very shortly.
I'm definitely not alone, I can assure you. I'm not sure.
I know we had,
but I won't be the only one.
We had a young guy who got kicked out of a pub over here, the OBH, because he had what we call the old shaggy dog. We call it the mullet in Australia, but yeah, wonderful stuff. So it leads to the next question about the challenges and opportunities that you see for impact investment in the shadow of what we call the COVID virus and what's happened, you know, in the unprecedented bushfires in New South Wales on the East Coast, actually. Yeah,
so I think, why don't we start with the opportunities and where we're seeing things at the moment, but worth getting to the challenges. I think there's a lot of interest in this as a space. This is a really well-timed conversation, and certainly well done to the team at Impact Seed for landing such a great group and such a huge attendance. There's lots of interest from investors. There's a real genuine desire to discuss things that haven't been on the agenda for a long time in a meaningful way. So at the kind of economic level, we're having really, first time I can remember, decent discussions around supply chain security and why we don't have any industrial strategy as a country. We don't have anything around investing in jobs, investing in local manufacturing. We don't have anything around our economic resilience. I think it's well beyond time that we had those discussions. And I hope we're having genuine discussions around some of the gross inequalities in our society, whether it's gender and race issues that for too long we haven't been open about. So there's a lot happening at the moment. We see a big push towards localism. We've seen in the pandemic just how local our lives can become. Speaking to some of the people on this call and other colleagues in Western Australia, we know that you went into a pretty solid lockdown some time ago, and in a similar way here in Melbourne, we've been finding that your life can become very local, and that if you stop spending, then that's a saving for you, but that's someone else's income. And so we're starting to really understand that our economies are very intertwined, and that we need to be thinking of each other in a different way. So that draws you towards more people being interested in impact investing. We hope to be able to support them to come into the space. But the challenges are real. So the challenges at an economic level are genuine. We've got a very fragile economy. We've got unprecedented government support at all levels. And I think genuine and real concerns about the next 3 months to 6 months and how things play out, and how do we recover in a green and meaningful way that can deliver on some of those genuine issues that I spoke about. So it's a difficult investment environment. We've seen a slowdown in our pipeline activity. Where we are looking to invest, we're either taking equity risk, so you need to have a degree of confidence around those returns to be able to commit the funding, or you're looking to lend to people who have to have the confidence that they can take on the funding. So some of the discussions that we've had, both in Western Australia and on the Eastern Seaboard, have been groups rightly saying we're fighting for our survival. Now's not the time for us to consider taking on borrowings. We need to put our heads down. We need to look at how we take our business forward. We're really interested. We're very keen to discuss these elements, but they aren't able to do it just at the moment. So I think the space for these discussions is really open. The challenge is how we delicately navigate investing in that kind of environment.
That is fantastic. It leads into the next one then. So the shearers from WA, we'll hold on to them for now. How can we accelerate impact investment into WA's renewable production sectors?
So I think in terms of how we accelerate impact investing more generally, and then I'll come down to WA, but one of the things that we're certainly of the view is the demonstration projects really matter. They give you the opportunity to demonstrate that techniques work. I know there's a number of people on this call today who are doing great work building out that evidence base. As a sector, agriculture is one where large investors have not made significant moves in Australia, often because they haven't had historic data. So it's a very opaque sector. So from a financial perspective, somewhat regrettably, we like to take numbers and put them in spreadsheets. It gets us away from a lot of the stuff Oral's spoken about, but it is the pervading methodology. So if that data is not available, then investors struggle to get comfortable with a sector. So it's a credit to WA Super that they're keen for us to pursue this area. And alongside those projects, a really crucial bit is storytelling and making sure we draw out what's possible. We all know at the moment, there's a genuine desire for hope. People want to hear positive stories. People want uplifting elements. We are all sick of working our way through the challenges that we know we face, whether it's the pandemic, whether it's climate, whether it's Indigenous issues. So really the push on the storytelling and the having these conversations. And I think before we came on, David was saying, well, is this a webinar or a meeting? The fact that we can see everyone's face today actually makes a difference. We feel more connected. And the big thing that we're focusing on is, which I said at the outset, how do we really connect that investment activity, the actual on the ground things that the money is doing, back to those investors, so that someone who's put their money in with WA Super can see that when we make an investment, this is the positive impact it's having, and over time we build up the storytelling element. So at a kind of high level, I think they're bits that we're very focused on. How to accelerate impact investment in Western Australia specifically. Look, as much as anything, I'm here to listen and get more information and hear from you. So today's session is very much part of that. Our commitment as fund manager for the WA Impact Fund is to consider investable projects and proposals. With patient capital, we've got the ability to invest over the next 5 years, and we can have a 20-year investment horizon, so we can be patient. We'll look to support investments that are adequate scale, but they do need to deliver that appropriate risk-adjusted return. And I think I saw a question pop up in the group chat that we'll get to on returns. So we're working with our partners, which includes Impact Seed, on developing that pipeline, and very much I'd encourage people on this webinar to contact us or the team at Impact Seed with your ideas. And I think Kylie and I were toting up the numbers recently. I think we've looked at kind of 15 or 20 proposals already. Some of them were too internationally focused, which is exciting for them, but doesn't fit the mandate. Some of them weren't quite investment ready. And in a really good sign, some of them were moving too quickly and we weren't able to move at the pace they needed to. So we're starting to see some great ideas, and we definitely encourage more of them to come forward.
Okay, very quickly, I'll move straight into Carolyn. If you could ask your question, that'd be great. Carolyn Suggett, are you still there? No.
I'm happy to read it out and then respond, David, if that works. Caroline just said her internet is terrible. That sounds like...
That's probably where it's at.
She may well be in Melbourne then, if she's got terrible. So Caroline,
5 zones.
One of the issues that she has is that investor returns, they're pushing for 12% plus. Anything more than 5 to 7 cash returns puts too much pressure on business expectations or extraction of farmland quality. How do we balance that? And then she made some nice comments about hearing me speak, which was lovely, Carolyn. Thank you very much. So from our perspective, the way in which we've positioned this, and this is a requirement given we have WA Super as the anchor investor, everything we need to do needs to first and foremost look at financial returns, but it also, in the trust constitution, needs to consider broader stakeholder interests. So we need to have a specific assessment of environmental and social impacts. So from the outset, the fund is very deliberately looking at all of those 3 elements. Then in terms of how we look at financial returns, I think because we're an impact investor, we can take a view on a broader set of risks and how we view those. So to make that very specific, we think the world needs to be rapidly decarbonising. We think that you need to have mechanisms that either price carbon, or if that's not politically tenable, make it more advantageous to be low carbon. It's another way of getting the incentives right, such that if we invest in a way that has a low carbon profile, we've de-risked that investment. If we de-risk the investment, we think we can have a lower return. So the fund doesn't have a specific return requirement, but we would expect that all investments will need to have at least a 5% return. And on some of them where there's equity risk, we do expect that to be in excess of 10% to compensate for the risks being taken. So a traditional approach, but with, I think, a more nuanced impact investment way of looking at things.
Another question for him.
Okay, Tim's got a question.
So Tim's question is, what accounting tools are we using to quantify changes in natural capital, and is this counted in terms of your ROI? So as an approach, every investment that we do for Impact Investment Group, and by virtue of that, the WA Impact Fund, We're very deliberate in how we define the impact up front when we do an investment. So we will go through, I would say, pretty rigorous approach to look at what we want to be measuring over time, and we try to keep that to the most material items. We don't have a kind of massive laundry list of things that we're looking to focus on. So for our regenerative agriculture investments, we will be looking at natural capital. We will be particularly focused on carbon sequestration and soil quality are the two measures that we're looking to focus on. Carbon sequestration, because that's a key element in delivering environmental benefits from agriculture, and soil quality, because of, we know in Western Australia, the ability to deliver regenerative agriculture practices will lead to improved soil quality and greater resilience. So from our work and the expertise we've brought on board to discuss through that, we're feeling confident that they're the two measures we'll select. And so, yeah, that's kind of the answer to that one, actually. I'll stop talking rather than just ramble.
Thank you, Jeremy. That's fantastic. And no, we don't want you to get into the rambling bit. Question from Keith. Keith asks, the burden for the reform we need is placed on or carried by private investment from leading farmers, First Nations peoples, philanthropy, and some leading corporate entities, and some impact investment. So do you think that the taxpayer government sense the need for substantial public investment into landscape regeneration?
So my answer can be really short, and I don't know if Kylie from Impact Seed maybe wants to pick this up because she's a bit closer to government, but certainly this needs everyone. Like we know that the private sector can only do so much. We know that government is able to provide regulatory certainty to the extent it can, and can move significant capital by both signalling incentives and investing itself. So the Clean Energy Finance Corporation in the renewable space has deployed significant capital and helped the maturation of the renewable sector. There continues to be ongoing discussions around the potential for a similar kind of investment vehicle for regenerative practices, whether they're agriculture or forestry. We would heavily support that, and we would support state-based initiatives that did a similar element. So do I think the taxpayer and government sense the need for it? Always very risky to talk on behalf of government when you're not part of it. So maybe that's that pointer to something we all need to be thinking more about and trying to focus on, because this is going to need government to come along.
A lot of questions, maybe. We've got it's Daniel here. We've got a lot of questions coming through for Jeremy, and I know we need to get on to the next session. Jeremy, are you happy to type in some responses to some of these?
Yeah, very happy to. I think just a number of them are coming through around pretty technical areas around measuring natural capital changes, different protocols, etc. So they're ones where we haven't settled on decisions, because we'll need to work with our partners and make sure they are the appropriate measures for the actual properties that we're looking to invest in. So they're ones I can't really answer today. There was one around what are the governance structures you use to administer the fund and who decides on the outcomes and measures. So that's one that Impact Investment Group has the responsibility for. So we are the fund manager. We have a trustee board, and any investment that our transaction team want to take up to them, we leverage the support of our Chief Impact Officer, and we would also be working with Impact Seed as we bring deals through the pipeline. So we feel we've got a good group of support through that process.
Awesome. I'll hand back to right on.
Thank you, Jeremy. That is great to hear all that fantastic news coming out of Melbourne, other than the AFL at this stage. But look, I just want to get into our next session, which is aligning perspectives. And in this area, we've got, I think, we've got Di Hegarty, Pierce Thurston, we've got Oliver Barnes and Liz Brennan, who will be talking in regards to a few of the issues. So what I'll do is we will actually